Hi, guys. Welcome back. This is my monthly update that I'm going to be going live with every month and just giving you guys what's been happening in the market for the past previous month and any other like pertinent information that might be going on like right now in the market. So usually how I like to format this is we talk about, the data and what that means, maybe touch on interest rates and anything that's interesting that's happened, as well as things that might be coming up. So thank you guys. If you're joining me live, thank you guys for joining me live. If you're catching the replay on Facebook or YouTube, awesome. Leave me a comment down below if you have any questions, and then I'll circle back to them and answer them. So I wanted to get started now with the data. So November market has been very interesting. And for me as an agent, I have one listing that's live on the market. And I also was servicing buyers at the time. So it looked, hi, Rhonda. So it looked really different on both sides. So on the seller side, my listing was moving slow. We were getting a lot of investor traffic, and the investors were taking advantage of the slow market, and they were like just lowballing my listing. And my seller isn't a distressed seller, and we didn't have a reason to take a lowball offer. So it was, so it's just been, waiting on actual buyers. And at this point in time, we started November off like close to 7%. The average interest rate for mortgages was 7%. So there were a lot of people that just weren't in the market. And you have to take that into consideration if you're a seller. So referring to back at the beginning of November, it was just very slow as far as listings is concerned. On the buyer's side, I entered in two contracts. Both of those contracts, I was able to negotiate down a minimum of $20,000, and I want to say one of them was either 25,000 or 30,000. I was able to negotiate down. So I really got excited for my buyers then because I'm like, this is great. We're going to negotiate the price. It just so happened to be they were cash buyers, so it didn't we didn't have to deal with interest rates. We just got the benefit of getting the home at a discount, which was amazing. So yeah, I've seen both sides of the seller and buyer point of view during November, and it was very interesting for both of those sides. I'm not gonna lie, I was very excited about what that could mean for buyers, like in November, and then moving forward, because it means that we're back to a normal market where you can negotiate the price down. And there's some other things I wanted to talk about that will like touch on now, but interest rates kind of went down lower, and that was even more exciting. And then there were new programs that were introduced. But I'm going to share my screen, and we're going to talk about right now the data, okay, for November. So November, the average, the median sales price was a 300, just rounded up 365,000. And as you can see, that was a decrease about $5,000, $4,000 from October. So you can look at this trending line, it's going down. And the median is like literally the middle of the sales price on either side. So that's the middle number. If we were to go to average, that average price is a little higher at 423 950, so 424, and that's obviously the average. You add all of the volume and sales. Sorry, not the volume. The amount of sales you add it together divided by how many units were sold. Happy Monday, Scott. Thank you for joining. So that was November. But even if you look at the average, that trend line is going down. So, and by the way, the numbers I'm looking at is the Metro Atlanta area. So it's the 29 Metro Atlanta counties that surround Atlanta, or Fulton County, I should say. So yeah, the median sales price went down. So that's really awesome for my buyers. If you follow me on Instagram, um, I posted, if you don't, first of all, if you don't follow me on Instagram, go ahead and follow me on Instagram, Marty Loves Homes. But I did make a post the other day about what you could receive for $350 in different parts of Atlanta. So this right here, the fact that the median sales price is 364, you can actually get a really nice 4 bedroom, right around 2,000, maybe lower, square foot home in just about all the cities. Well, one part of each side of town. I covered Loganville, McDonough, Douglasville, and then on the north side, I did Alpharetta. And Alpharetta for 350, you can get like a 2 bedroom townhome. So that was like the smallest. And everyone knows, if you're familiar with Atlanta real estate, Alpharetta is one of the most expensive cities to live in. So, anywho, moving forward, new listings. So these are homes that went on the market in November. They went down to 7138. So as you can see here, these lines, it looks like at first glance that it's in line with the regular trends. Obviously, real estate, we have trends throughout the year. And it looks like at first glance that this is just following along with the trends until you see that these bottom pits were actually December. So this was December, this was December. So what we're doing right now, what we did in November is equal or around what we historically have done in December. So that means home sales or new homes on the market took a dive. Um, and we typically see that in December. So coming up, I'm expecting this data point to go even lower before it goes back up in January. Hopefully, it goes back up in January like we normally see. So moving on, let's see, what do I want to do? Days on the market was it went up. So in October, we had average a median days on the market was 15, and now we're at 19. So that middle number of homes that have went under contract was 19 days. If we look at the average, it's a little higher at 33. So month supply, this is usually where we can tell if it's a buyer or seller's market. It held steady at 2.4. So that would make you believe it's a seller's market. But the way that we're getting these offers accepted and these extra incentives, it's a buyer's market. Buyers definitely have a better upper hand at negotiating just because there's not a lot of competition going on. So, whew, if you're looking to buy, now is a good time. And we'll talk about how you can get the best of both worlds with a lower interest rate and with these strong negotiating conditions in 1 second. Let's see. And then shows to pending. Oh, actually, no, I want to touch on this. So we have these two columns right here: percent of list price, which is 99.3. And that means homes sold 99.3% under asking price, or 99.3% of the list price. Okay. But if we go over here to percent of original price, it's at 97.3. So here's why these two numbers are similar but very different. So percent of original list price is what the home was listed for originally. That is with like the first price that, let's see, how do I want to phrase this? That is the first price that the home was introduced on the market as. Okay, so the percent of list price, a list price can change through decreasing the price on the home. So when you lower the price on the home, the list price, that's the new list price. And that was at 99.3%. So the difference between these two. Okay, so if homes stayed on the market with no price deduction or price changes, they sold at 97.3% of list price, of the original list price. Now, this part comes into play over here when they do have a reduction. Once that deduction happened, they sold at 99.3% of that reduced price. So it makes you think, like, if you just look at this data metric right here, that the homes were selling 100% at 99%, right at 100 of the percent of list price, but it was really like technically after it was already lowered. So if you are a seller and you're looking to put your home on the market, we're not like, this is the 100% line right here. right here. We're not up here anymore. So it's very important that, the homes are priced right, but just be mindful that there is an opportunity that your house might not sell above list price or even at list price. It might sell slightly lower. And that depends on, I'm sure, like a lot of these include not necessarily negotiating a lower sales price, which could be the case, obviously, but also repairs. So instead of you as a seller wanting to do repairs, a lot of sellers will just take that price, that cost to do the repairs off the price of the home, which lowers the price of the home, and it makes it appear as if the price was reduced or the seller lowered the price for that buyer, but it was in lieu of repairs. And so, yeah, I just wanted to explain the difference between percent of list price and percent of original price. And it's in the 90s, so I mean, you're still good, and like 97.3% isn't that bad. So, and then I want to just touch on shows to pending for people who are thinking about selling. It stayed flat at 10. So that means on the middle number of homes that are on the market takes 10 showings until it gets a pending contract or get under contract. At the highest point, we were probably at 18 back in 2021. And that just meant it was a lot of volume going through those homes, a lot of showings happening. Down here, we went to almost zero. Well, it was 8, but I mean, it's at the bottom back in April of 2020, and we all know what was going on then. So yeah, we're on the lower end of that, but that just means there's fewer showings, um, or I should say fewer people, yeah, showing the home. So that is the data on the Atlanta housing market. It's been very interesting, and like I said, great time for buyers. If you're considering selling, you have a need to sell your home. Don't wait on the market to decide what you're going to do if you have a need to do it. Okay. So next, I want to go to touch on 30-year fixed mortgage rates. So I'm not a loan officer, but I am interviewing my preferred loan officer on my YouTube channel. The video is coming up this week. It's going to be the next video I release, and he gives us all the insight about mortgages and all that good stuff. And it's going to be a series, but real quick, we'll touch on here. And I know this screen is like small. You can't really see the numbers, but I have them written down. So at the beginning of November, interest rates on average, and this is someone who's like the average buyer, it was at a 6.95 on November, I think it's November 3rd. And that is, you could essentially say, 7%. Rates peaked at 7%. Now, December, like as of this number is December 8th, rates went down 6.33 to 6.33. So that is about 0.62 decrease in interest rate, which is over half a point, which is amazing. And that just had to do with, I talked about it in a previous video, or maybe it was a short that I released on my Instagram. Like I said, if you don't follow me on Instagram or TikTok, follow me there. Marty Loves Homes. I give like really good information on a daily basis there. So anywho, I released a video talking about how in November the consumer price index came out and the numbers were better than expected, which means essentially it lowered our inflation percentage to 7.3, I believe, which was better than expected. Okay. And because of that good news, mortgage-backed securities had a very great day in the market. And when mortgage-backed securities has a good day, like it goes up, that means interest rates kind of go down. So people feel more comfortable buying those securities, and in turn, the interest rates go down. So that's what happened. We're back in the sixes. And this is going to touch on my next point with interest rates. Okay. And how you can take advantage of lower interest rates and this great buyer's market that we're in right now with negotiating prices down. So let's just say today rates are at 6.33%. I'm going to put the screen back on me. We have what's called, oops, how do I do this? Stop screen. Okay. So there is a program called a 2-1 buy down, and sometimes you'll see a 3-1 buy down. I'm going to take off my glasses because it's a glare. So Pretty much a buy down is a type of financing that lowers the interest rates on a mortgage for the first 2 years before it returns to the regular permanent rate. So let's just say today's interest rates, 6 point, the last one I saw on average, this is average, y'all, not like Bible, 6.25 for a 30-year fixed conventional mortgage. So if you were to do 2-1 buy down, through the lender or however you're getting your financing, the bank, if they offer these programs, you can pay. And when I say you can pay, it can come out of your pocket, but the better way to do is ask the seller to pay for it by giving you a seller concession. Okay. So now that there's less competition on the market, you have a lot of leverage to do this. So you can ask them for the money and you can take that money and apply it to this buy down. So the buy down works like this. The first year, rates are 6.25, for example. The first year, if you did a 2-1 buy down, your rate would drop 2 points and it would be 4.25 for that whole year. Then the next year, your rate will be 1% lower. And that will be 5.25. And then the third year, it returns back to the normal permanent rate. It's not adjustable. The permanent rate, which is 6.25, whatever you locked in. So when you get qualified for this, they will qualify you on the higher rate, but you're essentially buying down your points up front, like temporarily. So it's a temporary buy down. There's another alternative where you can do a permanent buy down, and the costs of that you would have to weigh, the cost of, would it be more beneficial for you to do a permanent buy down or a 2-1 buy down? I saw a chart on this somewhere and I can't remember like where it is. Oh, I wish I could have found that today. But yeah, and that's how you can take advantage of these programs to get really good interest rates. And then combine that with, negotiating down purchase price on a home, $10,000, $20,000. Don't ask for repairs, just ask for more money off the house, depending on what the repairs are. Do that. And then you can, really take advantage of this market. So that was pretty much it that I had to talk about today. So I hope this gave you a really good picture of where we are in the market. My goal when I'm doing this is there's so many fear mongering headlines out there that make you just afraid. It says like market crashes or this and this and that happen, and it's the headlines. But when you read the articles, it's nothing like the headlines are talking about. So my goal is to just get people more comfortable with knowing the facts and the data and going over everything. Like, even when we did have, go through that housing market crash back in 2008, there were still homes that were being transacted on the market. People were still buying and selling homes. So I don't have like a pessimistic view of the market coming up for 2023 because, like I always say, if you have a need to buy or sell, you have a need to buy or sell. Like, let's just say you're in a 1-bedroom apartment and you're about to have a baby. Let's just say you're about to have twins. Are you going to stay in that 1-bedroom apartment with twins? If you can qualify for a mortgage, you can afford the down payment, and you can afford the monthly rate, or are you gonna like be like, oh, the interest rates are high, I can't move, I'm just gonna stay here with my partner and our 2 kids in 1 bedroom? Probably not. You're probably gonna, make the decision like, well, interest rates are high, but we need to move. And we're gonna find a house that we can afford. And when the rates go down, we're gonna refinance. That's usually what people do when they have like life altering decisions that cause them to buy or sell. The same thing with selling. If you've inherited a property or you're trying to downsize a property and you don't want to keep it anymore, you have other plans to move into a condo, move into like assisted living center, or not assisted living, non-assisted living, an active adult center. You're not going to let the market stop you from selling your home. Like, you might not get top dollar like you would have gotten earlier this year, 2021, but you'll get top dollar in today's market, whatever that looks like. So if you are interested in buying or selling, you have any questions, feel free, you guys, to give me a call. I always put my information like in the description. If you're watching on YouTube, it's in the description. If you're on Facebook, you automatically have a direct line to me. So just send me a message. And yeah, I look forward to seeing you guys all throughout the holiday season. Happy New Year if I don't see you before then, which you will. I probably won't be going live, but you will definitely see me on the Facebooks and the YouTubes and the Instagrams of the internets. So thank you guys for joining me today. I will see you guys next time. Bye.